Alright guys, so I hope you're doing fine as always. In today's video I will be going over this tool that I built that will help you analyze stocks in just seconds. This tool, as all other tools that we have made, are shared on the Discord server for absolutely free, so you can always find it there under the tools section. So in this video I will be going over the features of this tool using Nike, ticker NKE, as an example. So hopefully by the end of the video you will understand the tool a little bit better and you will be able to use this on your own. So without further ado, let's jump right in. Alright, so now let's have an actual look into the tool itself. So first of all, this tool is a standalone HTML file. So you only have to open it in your browser. There's no subscription, no login, no installation needed. It just connects to a free financial data API where it pulls all the numbers from any listed stock, and it runs the analysis based off that. So the first time you open this tool you will get a pop-up window which will ask you to connect your free financial data API of Alpha Vantage. It will also give you the link on how to get it. This is completely free, I'm not affiliated with them whatsoever. It's just the best API I could find for a free stock call. All you need to do is log in with an email and it will give you a free API key where you can run up to 5 stock analysis per day with this tool. With the API you get 25 free calls a day, but this tool alone uses 5 each analysis. So you can run up to 5 free analysis per day. If you want to do more, you will have to get a premium API key. But for me personally, 5 is more than enough per day, so I'm personally using the free version. Where to get this, the link, etc. will also be in the Discord server, so if you cannot figure it out from the tool alone, please have a look over there. So once you have input this key, you will get to this screen where we can finally start. So like we said, in this video we will be using Nike as an example, so we just input the ticker here and we click on Analyze. Like you can see, this will take you a few seconds and then this window will appear. So now let's go through each section one by one. So as you can see here already, first things first, the tool will fetch the company name, the ticker, the exchange, the sector, the current live price, the daily changes, the market cap, its 52-week high and low range, etc. So here for Nike we can see we have a market cap of 60.8 billion. It's consumer cyclical, it's footwear and accessoires. It's on the Nasdaq. It's 52-week low of 40, it's 52-week high of 78, weekly volume and the beta. I'm recording this on Wednesday, the 1st of July, before New York opened, so if these numbers are different for you, something can have changed depending on when you're checking this out. Below that, here on the summary tab, we get a short text about the company, so here for Nike, it explains what Nike is, where its headquarters is, when its financial year ends, and a link to its website. So all of that is fetched automatically. Now I think it's important, before we really start, that we discuss this color coding. So we can see green, yellow and red. Green means that the metric is in a healthy range for the company's specific industry. Yellow means it's neutral or fair, and red means it's a concern worth looking into on why it's this number and why it's below industry averages, for example. So if it finds a very specific industry, it will write down here that it's comparing versus this industry. The table with all the different industries it compares to and the average numbers of these industries can also be found on the Discord server in a separate PDF file. So like we said, these colors are not based on universal fixed numbers, unless it cannot find a specific industry to compare to, but the tool will automatically look for which industry is this company in and benchmarks each metric against what is normal for this industry. So still in the summary tab here, but below the about we got the core business quality with 4 different cards. These 4 different cards will tell you whether the underlying business is healthy or growing. We have the free cash flow growth. This is how much the company's real cash generation has grown over the last 3 years. Cash is the only thing you can't fake with accounting, so this is a very honest growth metric. We have the ROIC versus the WACC. It's one of my favorites. If the ROIC is above the WACC, the business is genuinely creating value. A consistent positive spread here is a definition of a competitive moat. The tool will use all these abbreviations like ROIC and WACC. What all of these means is also a separate PDF file in the Discord server. Here in this case, for example, ROIC is return on invested capital, while WACC is weighted average cost of capital. So don't worry, don't get overwhelmed by all these abbreviations. There's a nice table in the Discord server what everything means and what it does. Then we also here have the revenue growth, which shows us if the top line is actually growing over 5 years. And we have the net income margin, which is what percentage of sale ends up as profit. And it's going up or down versus the last year. On the second row, we have the financial health. Is the company in a safe financial position? So it shows the net debt and EBITDA. Think of it like a mortgage to income ratio. How many years of earnings to pay off the debt? Below 2x comfortable, above 4x is a warning sign. We have the interest coverage. Can the company comfortably pay its interest bill? We have the net debt. This is total debt minus the cash. Negative means more cash than debt. We have the shares trend. Are shares going down through buybacks or up through dilution? In the third trend we have the valuation multiples. How expensive or how cheap is a stock right now? This will show you the PE ratio. This is the price divided by earnings, which is probably the most quoted valuation metric. We have the forward PE, which uses next year's estimates. We have price to sales, price to book, the EV over EBITDA, which is a professional acquisition multiple. We got the price to cash flow, which uses real cash instead of the accounting's earnings. And we have the PEG ratio, which is the adjusted price to earnings for growth rate. And again, all of this is benchmarked against the industry average, so you immediately know if a number is cheap, fair, or expensive for this type of company. Of course, it's just a comparison. You always have to do your own research as well, because some companies may be very small and growing exponentially quickly, while these big established companies have a slower growth, as we're speaking about billions instead of millions. But this is just a bottom line which you can use in your analysis. Then here at the very bottom we have 2 more things side by side. On the left we have the analysis consensus. This is what professional analysts collectively think. It's a breakdown of strong buys through strong sells plus the average price target and upside percentage. This is fetched from Alpha Vantage, so who these analysts are, that's a bit of a question. Usually all these financial websites do have analysts, or they fetch it from Wall Street analysts, etc. So take it with a grain of salt. It's just what the consensus is of these people. Where are they looking to buy, sell, or hold? And then on the right we have a BQ score, which stands for Business Quality Score, out of 9. This is a bar chart which shows you which factors pass in green and which fail in red. Now, let me show you this business quality score breakdown. Because it's not necessarily because a business is not scoring on some specific points that it's necessarily a bad business. You will see by a lot of big names, they're not scoring 9 out of 9. This is pure mathematical. We will have a deeper look in this business quality score right now. So to go there, we scroll back up and we go here to PQ score. And we can see it's split up in 9 points. You can see we get a score out of 9, so 1, 2, 9. The BQ score tab grades the company across 9 specific business quality factors. Each one gets a grade from A to F, automatically calculated from the data. The 9 factors covered are growth, profitability, debt safety, valuation, capital allocation, share and shareholder returns. This is a structured, repeatable way to assess any business. So let's start here by BQ1, the revenue growth. This is a bar chart over 5 years, a data table with exact numbers and a summary of the CAGR stat. And it has a grade from A to F automatically assigned based on how it compares to the benchmark. Of course, I will not be going over everything in detail, as this will be explained in the PDF file, which is posted also on the Discord server. But pretty much it just shows you the bar chart of the revenue growth. And every factor will follow the same layout, so I will just be clicking through all 9 of them here. I will not be going over everyone individually. It's pretty much self-explanatory what they do, what they show, and if you are struggling to understand, you can just read the PDF file which is shared on the Discord server. So you can just click through them, look at all of them. They do get a score. Of course, also do your own research, don't blindly trust the tool, but it's a quick overview of what the mathematical scores would be. Now there's also this tab right here with financials, so if we click on that, this will give you a 5-year of raw historical data across every major financial statement. Here at the top we have the income statement, revenue, gross profits, operation income, net income, EBITDA. So it's quite easy to see the 5-year trend across each row instantly. Next we have the balance sheet. This shows you the total in assets, liabilities, equity, cash, debt. If we scroll down a bit more, we get a cash flow statement, which shows you the operating cash flow, the capex, and the leveraged free cash flow, which is the real cash generated for shareholders. Further down we have the EPS history with year-over-year growth rates, the ROIC, and gross margin trends per year. And then finally we have a full debt and solvency grid with 12 debt metrics. Everything in these tables is a historical fact, so there's no estimations right here. And you will see sometimes it will show you green numbers which are positive, sometimes it will show you red numbers which are quite negative. So that's quickly the financial tab. Then you will see finally we have the intrinsic valuation tab. So if we click that one, this valuation tab is where the tool calculates what the stock should actually be worth based on different methods. There are 3 completely different methods, each based on a different logic, averaged into one final estimate right here. So first of all we have the DCF, which is the discounted cash flow. This is a golden standard. It's projects free cash flow 10 years forward. Then adds a terminal value, discounts everything back to today's money using a cost of capital rate. The exact calculation on what it does or how it's calculated can be found on its PDF file in the Discord server. That will be too much to be going over in this video. Then we have the Graham's formula. This is developed by Warren Buffett's mentor Benjamin Graham. This is just a mathematical formula which estimates fair value from earning per share, an expected growth rate, and the current interest rates. Again, the formula, what it does, how it's calculated, can be found in the PDF file. And finally, we have the multiples valuation, which is the simplest of the three. This takes the typical industry price to earning ratio and multiplies it by the earning per shares to get a fair value estimate. The ultimate value then finally is the average of all three of these above. So it's one number, it will show you a buy, hold or sell signal as well, but please don't blindly copy it. Do your own research. Of course, this is just a tool to help you evaluate. Of course, there can be deeper meanings in stock prices like news, earning reports, etc., or just something bad happened, who knows. This is purely mathematical. Always do your research in the stocks themselves on a more news basis, etc. So below these main cards, we still have some more information, which is a model that runs 3 times on a DFC scenario. So remember from here above, DFC stands for discounted cash flow. It takes 3 scenarios into account. First, a bear case, which is pessimistic. It's slower growth, higher discount rates. Then we have a base case, which is your main realistic assumption. And then we have a bullish case, which is optimistic, so strong growth, low discount rates. Then the comparison table shows you all 3 side by side, shows you the intrinsic value, and a buy below price, upside or downside percentage, and the signal. Again, don't blindly copy this. Do your own research, also chart-wise on where prices are to buy. For future updates, I might even delete these buy and sell signals, as this shouldn't be taken as a signal. This is pure mathematical. But I hope it's somewhat clear that there's no specific answer and there's not a perfect buy or sell range. It's always a range of different scenarios which you have to take into account and somewhat navigate through all 3 of them. So if we scroll down a bit more, we do get the details of the DFC model, the Graham's formula, the dividend discount model, if the company pays dividend, and the mode and quality indicators, which you can see all this information. So that's standardly what the tool does. Now, as you can see right here, it shows you the model assumptions, which is a standard value taken based off our industry. But these can be fine-tuned, of course, so you can input your own numbers here. I can imagine at first this is quite overwhelming and you don't really know what to input here in these values. So quite easy, there's no shame in that. Just take a screenshot of this step, ask ChatGPT or any AI model to act like a Wall Street analyst and ask it to give you values for each one of these numbers based on which stock you have input. Totally no shame in that. So I did this, for example, here for Nike, and we get, instead of 10 here, it will use 7.5. We get an 8.5. We get a 2.75. We get a 9.5. This is okay. This is okay as well. Margin safety, it takes 25% in this case, and a sector PE of 24. Then we just click recalculate, and we can see these prices here already changed. So based off your input, your ultimate value, DCF analysis Graham formula and multiples PE will change. So definitely not ashamed to ask AI to help you with this till you get more experienced and can fill in these numbers on your own. So this is something you can change. Then also you can customize more things, of course, because the more input you give it on your own, the more specific it will give you price ranges based off your estimates and your details. So we go here to the settings and we can see everything is fully customizable. So here at the top we see the BQ score thresholds, which you also can change. Again, if you don't know what to input here, ask ChatGPT to help you with this, no shame in that. Or just use the standard numbers, which are pretty standard for the industry you're in. But of course, if you adapt these numbers based off your specific company, like it's a well-established company or a smaller high-growth company, etc., you will get a bit more precise numbers. So here for a Nike, for example, which is a well-established company, we can change these numbers to here, let's say 25, 25, 4, 5, 5. We can keep this on 10, and we put this to 2.5. Then below that we have our DCF assumptions for our bear, base and bull cases. Also these you can ask AI or just keep them on the numbers we have here. Again, depending on if you want to keep it industry averaged or more specific for your specific company. Let's say in this case we want to change this to 4.5. Let's say a 9.5, a 2. We keep this on 7.5, 8.5, 2.75. We put this to 10.5 as it's quite a big company, so we need to lower the growth and expectation a little bit. 8 and 3.0. Then also for the Graham formula, you can change some data as this is not fixed. So let's say I want to change this to, but we keep this on 9.5, 4.4 is okay, 5 is okay, let's just put 5 to change something, 25 and 24 is okay really, so nothing to change here. You just click apply and recalculate, or if you just want to get it back to the basic, you click reset to default. So let me apply all of this. You can see the bull case here changed. It will change our BQ score. Maybe in the summary it's still scoring the 5 out of 9, so that number hasn't changed. But the individual numbers can potentially have changed a little bit. It will be different for every single company. So I know this is quite a lot, but that's in a nutshell what this tool can do. It's quite powerful, it's quite useful in my opinion to have as an extra help in your analysis. Of course, the real analysis you have to do on your own. You have to open the charts, you have to look at the earnings, you have to look if there's any news. But this can quite help you by mathematical details on which prices might be quite interested or where you could consider looking at to buy, to sell, etc. But of course also look at based off your chart levels. Now that's the technical part. I know it's a lot, and it will be overwhelming, but give it some time, play around with it, read the documents in the Discord server, print them out, etc. It will take some time, but in my opinion it's definitely worth learning. So now that was all the technical parts. Now some final features. Here on the top right we can switch between light and dark mode. I always prefer dark mode, but for some people light mode may be more interesting, so you can do that. The setting wheel we already saw, it's where you can change your inputs. And then we have an export to PDF. So when you're done with your trading analysis, you can make a PDF out of all these numbers so you don't lose it. So if I click export to PDF, I get the option to print a light or a dark mode PDF. So that was pretty much all of it. Maybe one more little thing here. You have a demo mode. If I click on that and then analyze, it will just give me a demo numbers or some made up numbers. You can see the company demo. This can be used to learn the tool, play around with it, check it out, and it doesn't use any of your 5 API calls for the day. So if you just want to check the tool out, what everything is, where everything is standing, turn on the demo mode so you don't use any of your 5 daily calls. So that was pretty much everything for this video. I know it was a lot, and I know you will probably have a lot of questions, so please feel free to ask them in the comment section or on the Discord server, and I will catch you guys in the next one. Take care, see ya, bye bye.